Welcome back. Up now, we have Forum Daily's Energy Update with Dan McTeague, Senior Petroleum Analyst at Gaswizard.ca.
Well, thank you for this, Nima, and Happy New Year to all your viewers here. It's been quite a spectacular year, 2022. 2023 is going to be really a carbon copy of what we saw, not perhaps with the peaks and valleys in which we saw the first half of 2022, push average prices for at the pumps from about $1.38 all the way up to $2.16 a liter by June. We're probably going to hit $2 a liter as an average in Canada, roughly around that time. But in the short term, you've got a lot of a lot of funny things happening with traders. We're very nervous about the Fed and other central banks around the world taking good news, which would otherwise be very bullish for energy prices, and converting those into fear that will mean even higher interest rates, as central banks who've lent and provided quantitative easing or easy borrowing with low interest rates for far too long are now trying to do their very best to crash global economies. That some may characterize that as unfair because they're concerned about inflation, but it's not lost on yours truly that if you're going to increase carbon taxes and you have a central bank, the Bank of Canada, saying they're good with green policies, that will see carbon taxes rise by 3.5 cents a liter come April 1st, and a clean fuel standard, which kicks in on July 1st, which could start the long process of 7 years towards what will be a 28 cent a liter average price increase by 2030. Those numbers alone on fuel are higher than what the Bank of Canada is recommending as inflation. So it seems that they can't have it both ways. They don't want inflation, but they're willing to grease the rails by supporting climate policies, ridiculous, irrelevant climate policies that are not only trashing the value of the Canadian dollar and driving up the cost of energy and driving, as a result, the cost of food. They're also, of course, the very thing that are going to see prices move much higher in the years ahead. So for all those reasons, 2023 is definitely going to be a very expensive year. Don't believe that what we're seeing today in the first week or second week of January is indicative of where we're going. We've seen gas prices across Canada drop about 8 to 9 cents a liter. That's a head fake. Don't fall for it, because ahead of us lies some pretty significant price increases. Diesel, of course, will continue to be at or well above the $2 a liter threshold towards summer. I expect that to be towards $2.75. So whether you are in British Columbia, where Vancouver prices are $1.70, look for this time next week possibly $1.73. Not much in the way of movement. Interior BC in the $1.60, 65 range, moving up to by about 2 or 3 cents a liter. Alberta, where the Premier rightly got rid of their provincial sales tax of 4 cents a liter. Bad timing, by the way, because over the previous 2 weeks up to the January 1st, wholesale prices had gone up in the United States by 20 cents a liter. So people didn't get the full effect of the 20 cent a liter hit. Gas stations withheld, and unfortunately wound up with about a 15 cent a liter increase. Those actual prices could start to trend down a little bit, down below, say, $1.28 on average in the province of Alberta. We're going to be looking at continuation of stable prices in Saskatchewan and Manitoba, respectively, $1.46 in Saskatchewan and about $1.47 to $1.48 in Manitoba. Ontario, that's going to remain pretty much where it is now, up and down a couple of pennies, likely a little ahead of where it is right now in the $1.40, 42 range. Quebec, same thing, $1.56. And the Maritimes, well, the Maritimes will continue to see their price increases by the end of the week, probably to the tune of about 5 cents a liter on average. So, Nima, we're looking at a scenario in Canada where everyone wants to look for all the excuses as to why inflation is high, why the cost of living is so high. Very few people want to spend the time recognizing that one of the most important things that all of these commodities have in common is that they're priced in US dollars and that they are based on energy. Hydrocarbons, whether it's natural gas or diesel or oil, are all likely to move and surge ahead as the world continues to struggle with tightness in supply, made no better by the fact that Canada has refused not only to supply the world with natural gas, which it has significant amounts of, but oil as well. We're the third largest producer in the world, and if anybody says that global inflation is a global phenomenon, when it comes to energy, Canada has a lot of explaining to do as to why it refused to get pipelines built to get our energy that the world desperately needs to markets. So that'll be the theme for 2023. Looking for more next week at this time. Nina, back to you.
Always lots to consider, Dan. Again, that was Dan McTeague, Senior Petroleum Analyst at Gaswizard.ca. All right, well, stay tuned. We'll take a look at crypto markets right after the break.